You got a form in the mail. Or maybe it showed up in your email. It says 1099 at the top. And if you're like most freelancers, the first time they see one, you have absolutely no idea what it means. You might have ignored it, tossed it in a drawer, told yourself you'd deal with it later. Here's the problem. That piece of paper, that one form, can cost you thousands of dollars in penalties if you handle it wrong. They knew before you opened the envelope. So let's talk about what this thing actually is, what it means for your taxes, and, most importantly, the one mistake almost every first-time freelancer makes after receiving one. Let's start from zero. No assumptions. If you've ever had a regular job, you got a W-2 at the end of the year. Your employer used that to tell the IRS, here's how much we paid this person, and here's how much tax we already withheld. Done, handled, automatic. The 1099 is the freelancer's version of that. Except there's one massive difference. Nobody withheld anything for you. No employer pulled taxes from your paycheck. No one set money aside on your behalf. That responsibility is entirely yours. The 1099 is your client saying to the IRS, hey, we paid this person. We didn't touch their taxes. That's their problem now. That's it. That's the whole concept. It is an information form. It tells the IRS what you earned, and it puts the tax burden squarely on you. Now, and this is where most people get confused, there isn't just one type of 1099. There are actually over 20 different kinds of 1099 forms, but as a freelancer, you almost certainly got one of two, the 1099 NEC or the 1099 MISC. Here's how to tell them apart in 10 seconds. NEC stands for non-employee compensation. If a client paid you for your work, design, writing, consulting, coding, anything, this is the one they send you. This is the main one. This is the one that matters most. The 1099 MISC covers everything else. Rent payments, prizes, legal settlements, royalties. If you're a freelancer getting paid for services, you're almost certainly looking at a 1099 NEC. Check the top right corner of your form right now. It'll say one or the other. Now here's something that trips people up every single year. What if you did work for a client and you didn't get a 1099 from them? Does that mean you don't owe taxes on that income? You've probably heard of the $600 threshold. Here's what it actually means. If a client paid you $600 or more in a calendar year, they are legally required to send you a 1099 NEC. Under $600, they're not required to send one. Simple enough, right? Here's where freelancers get themselves in serious trouble. They assume that if they didn't get a 1099, the income doesn't count. That is wrong. Completely, dangerously wrong. The IRS requires you to report all self-employment income, every dollar, whether you got a form or not, whether your client forgot to send one, whether you did 3 jobs at $400 each for 3 different clients. That's $1,200 in taxable income. No 1099s received, still fully taxable. The 1099 is for the IRS's records. Your obligation to report exists independently of whether you received one. Now, let's talk about what happens to your actual taxes once that 1099 income lands on your return, because this is the part nobody warned you about. When you report 1099 income, 2 things happen. First, it gets added to your total taxable income, just like a salary would. But second, and this is the one that shocks new freelancers, you owe self-employment tax on top of that. Self-employment tax is currently 15.3%. That covers Social Security and Medicare. When you had an employer, they paid half of this for you. You paid the other half. You probably never even noticed it. Now that you're self-employed, you pay both halves, all 15.3%, yourself, on top of your regular income tax rate. So if you're in the 22% federal tax bracket, you're looking at roughly 37% total tax on your freelance income before state taxes even enter the picture. That is why freelancers who don't plan ahead end up owing terrifying amounts in April. Not because they did anything wrong, because nobody told them this was coming. And this brings us to the most expensive mistake I see first-time freelancers make. They spend the money, all of it. Client pays them $5,000. $5,000 goes into checking. $5,000 gets spent. April comes. The IRS wants $1,800 of it back, and it's gone. This is not a rare edge case. This is the single most common financial crisis in the freelance world, and it is entirely preventable. The fix is simple. Not easy, but simple. The moment any freelance payment hits your account, move 25 to 30% of it immediately into a separate savings account. Don't touch it. Label it tax reserve if you have to. Treat it like it was never yours, because technically, it wasn't. That slice belongs to the IRS. You're just holding it. The exact percentage depends on your total income and your state. But 25 to 30% covers most freelancers safely. If you overset aside, you get a refund. If you underset aside, you have a problem. Always round up. Now, what do you actually do with your 1099 right now? Here's your exact action step. Step 1. Find every 1099 you received this year. Check your email. Check your mail. Check your client portals. Some clients send them digitally. Some still mail them. The deadline for clients to send yours is January 31st each year. If it's past that date and you haven't received one from a client who paid you over $600, contact them directly. Step 2. Write down every dollar you earned this year from freelance work. Every client, every project, every payment, even the ones without a 1099. Step 3. Cross-reference your 1099s against that list. Make sure the amounts match what you were actually paid. Clients make mistakes. If the number on your 1099 is wrong, higher than what you actually received, you'll want to contact them to issue a corrected form before you file. Step 4. Set aside your tax reserve if you haven't already. It's not too late. Even if payment came in months ago, move the percentage now. Partial coverage is better than none. Step 5. If this is your first year with significant 1099 income, consider whether you owe quarterly taxes. But know this. If you earned more than $1,000 in self-employment income this year and didn't make quarterly payments, you may already owe a small underpayment penalty. Not a crisis, but worth knowing. The 1099 isn't complicated. It just looks that way the first time. It's your client telling the IRS what they paid you. It triggers self-employment tax on top of income tax, and it means the responsibility for handling your taxes is entirely yours. Nobody's going to do it for you. But now, you know what it is. You know what it does. And you know exactly what to do next. Next video, how to calculate exactly what you owe in quarterly taxes.